welcome to the Ultimate Bull Run, where we bring 100 bulls, 100 stories in this one legendary run. Our mission is to celebrate the journey and the process of trading and investing, rather than just focusing on the numbers, because we believe wins and losses are just the tip of the iceberg. And today, we have a true market veteran with us, Jason Sen, with over 35 years in trading, from the wild trading floor of London to the digital age. Jason has done it all. He's not only traded for himself, but has guided top investment banks and thousands of traders with his sharp analysis. His story is about mastering the markets through the constant learning and adaptation. So get ready to learn from one of the best. Jason, welcome to the show. Welcome to the Ultimate Bull Run.
Thank you so much. Really excited to be on your show. I really appreciate the invite.
Thank you. It is an honor to have you. We usually take it way back, Jason, to when you started out trading, right? Your trading career started at the age of 19, which is very young at that time.
And a long time ago, because I'm very old.
No, you're still young, but starting trading at the age of 19, right? What inspired you to enter in this field, and how did your initial experience kind of shape your approach to the trading right now?
Okay, so like all teenagers, I wanted to make some money. I wanted a nice car. My father was a trader, day trader. So he's probably like one of the original day traders, because he was day trading in the 80s. And I used to go into the room where he worked, and he would like we all have charts now on our screens, but in those days we didn't have laptops. We didn't have cell phones. They didn't exist. So the only way that you could get prices was maybe off the TV or calling your broker. So he would sit in a room and he would have A4 graph paper on the wall stuck together with sellotape, and he traded the FTSE. You couldn't trade more than one product in those days because it was so difficult to monitor the prices anyway. So, and he would write with pencil the price, a bar chart. In those days, we didn't even know really about candlesticks. So he would do a bar chart, open, high, low, close. And he'd have this bar charts on. Actually, he started with line charts, and then he discovered bar charts. So I'd go into his room and I'd see all the charts on the wall, and I'd be like, "What's this, Dad?" And he'd say, "Oh, it's the FTSE." And so I kind of got into it through my dad. And then he, like, for example, one day he made £100,000, which in the 80s was a huge amount of money. I mean, it's a huge amount of money now. But unfortunately, he lost it quite quickly because he wasn't a very disciplined trader. So I realized that you could make huge sums of money doing this if you got it right. And I obviously realized you could lose huge sums of money as well if you didn't really understand what you were doing. So that was my introduction. And I was very lucky because I then sent off my CV to various different banks. Must be like 50 banks in the city. And one of them hired me to help with their broking. Option trading was quite a new thing. So they were expanding quickly. So I got a job on the option floor, answering the phones to the clients and taking their options orders. So, I mean, that was really exciting. 19 years old, right on the stock exchange floor, in all the hustle and bustle. And, so I was right in the middle of the financial markets at the age of 19.
Wow, that is really inspiring. And it is true that things start with the dream of whatever the dream is, like financial freedom or fancy cars or, big house or anything. Like it starts with the dream. And then it was really great that you got the inspiration right from your home. A lot of people kind of don't have that kind of, mindset of investing and trading. And in 80s, it's like it is one of the best place that you could ever kind of born in, right? And
yeah, I was lucky to be in the right place at the right time, for sure.
True. And Jason, transitioning from the trading floor, like you said before, to the electronic trading must have been a significant shift, right? Since in a trading floor, you could feel the volume coming to the room, right? You pick up the call, you see orders coming in, you could kind of again feel the volume, and which is something you lack in the electronic trading system right now. What were the biggest challenges you faced during the transition from the trading floor to the electronic trading, and how did you kind of adapt your trading style?
That's actually a really good question. And you're absolutely right, because it was all so visual and audible on the floor. You're watching you can physically see the orders coming in the pit sometimes if you're watching the booths that were around the pits. And the brokers would stand on the outside of the pit doing hand signals because you couldn't shout. There was too much noise. No one could hear you. Everyone was shouting. So the brokers would interact with their colleagues who were on the phone to the clients, and then the brokers were standing in the pit. So they would be, so the guys on the phone would say, you know, what's the size in the bund? That meant size. And let's say it was like 54 bid at 56. The broker would be going, it's 4646. And he'd be saying, what's the size? Oh, it's, you know, like in 100 or 500. So it was all hand signals. And then the broker might turn around in the pit and go, okay, I might be trying to sell some at 56. So I'd be going 6, 100 at 6, 100 at 6. And so then he might turn around to me and say, okay, you, I buy 100, you, I buy 100, you, I buy 100. And so, you know, even though I might be only like 5 meters or 4 meters from this guy, I would actually be trading with hand signals as well. So you just had this automatic, you just did it automatically, of course, you know. Anyway, sorry, I've gone off subject a little bit there, but it was just so physical. You were trading with your hands, you were shouting, you were watching, you were listening, and we all had these brightly colored jackets on. It was just tremendous. It was so much fun. You can imagine the atmosphere just when prices were moving and the money was being thrown around. You know, I might be up or down £50,000 in a day. You know, it was great when I was up. It wasn't so great when I was down. So yeah, that was the transition. Could not have been more of a contrast. You're suddenly sitting in front of a screen watching prices moving up and down. There's no noise. There's no one to talk to. You can't see anything. You can't see people working. It was really difficult. It was scary because I'd survived for like 13 years on the floor, and suddenly I was going to have to, in order to survive, I was going to have to learn a completely different skill set. Nothing that I did on the floor, you know, would have been of any use to me really in trading financial markets on screen. And even the markets changed. So one of the things actually, he didn't really think about mental health or discipline, or, you know, nowadays it's like, oh, you risk 1% on a trade. You have a stop loss. You think about your risk reward. You place your target when you enter the trade. All these disciplines and processes that we have. That was something I completely learned all over again from screen trading. I had to become far more disciplined. And I lost £30,000 of my own money immediately as soon as I started trading screens. I had no idea what to do. It was completely new for everybody. Some guys who'd like made 7, 8, 9, 10 million on the floor, I heard stories about them losing everything on the screen. They just couldn't adapt. They were such great floor traders, but some of them just couldn't make that transition. And then others who were not great traders on the floor were making absolute fortunes, like bigger fortunes than people made on the floor. It opened up a world of opportunity because you could trade more markets as well.
Wow, that is a fascinating story. A lot of people miss that thing. And talking about what were the key differences that you found? Was it how fast the things were changing? Because it is scary to see, like, spending most of your time in the pit, right? Listening to those orders, and all of a sudden you are kind of blinded by it. You're just staring at the screen. The prices goes up and down. You kind of like you said, it is like empty room, and you're all alone by yourself, right? What were the benefit as well as kind of like the drawbacks of the electronic trading that you found?
Well, actually, when the floor first shut, people didn't trade from home. I mean, there probably were people trading from home, but most of the floor traders, at least, so some of the floor traders who had vision and tried to shape online trading for floor traders, they opened up offices in London because we still wanted to go and be in a place with traders where we could talk about financial markets. What do you think about the bund? What do you think about, short sterling? What do you think about the inflation number today? And so people created these prop trading rooms where you went, you paid money, you got a desk, you got a screen, you got your Reuters and your Bloomberg, and then you were still mingling with traders, and there'd be like a tannoy where they would announce, right, 5 minutes unemployment is coming out, it's expected at blah blah blah. So they tried to create almost, I guess, like a bank trading floor. They try to create that for us. And then, because even in those days, smartphones didn't exist, and people weren't really, you couldn't really get the equipment that you can get now to trade from home. So that was a transition between floor and screen trading. We had an office. I mean, nowadays, I don't think many people go to a physical office. I think everyone just trades from home.
Yeah.
And that's what's so amazing. Anyone in the world with $100 can become a day trader within 5 minutes. You just open an account, you send your contact details, you open the account, you put $100 in, and bang, you can be a day trader. It's just, for me, it's quite mind blowing now. And people who contact me, you look like a very young man. You're obviously very smart. You understand financial markets. And for me to be getting teenagers and people in their early 20s who are like, hey, I want to be a day trader. I met a guy the other day, 18 years old, super smart guy. I'm so impressed with his knowledge, his focus, his dedication. He wants me to come to the office and meet some of his guys. AJ, if you're watching, hello. And I'm just like, wow, it's a different breed of young people now. It's so impressive that the opportunities that they have.
That is really true. And we did have two very young people. They are 16 and 17 years old when they were trading.
Wow.
And they are
Really?
managing like a profit fund of $200,000. And they are, yeah, I was surprised. And when I was kind of having a talk with them, they were talking about, risk and reward, and then like how much do they risk, like 1 or 2% bare minimum. They are disciplined. Wow, at that age, you are a disciplined trader. You're gonna have a very good trading career along the way. That is, and it has like opened a lot of doors of opportunity for young people too. That's true. Jason, can you share some of the pivotal moment in your career, right, where you felt a significant breakthrough in your trading approach or understanding the market, and what led this turning point? Because as a trader, you just trade. It's like a lot of people go to school. They spend 4 years, 7 years, 8 years to kind of get a degree, right? But when it comes to trading, it is like, okay, I want to trade, I want to make money. Let's get into the market without even learning anything, and they kind of do the trial and error, and maybe probably read a couple of books, right? And they kind of go in a line, in a path of learning through losing money and making some. And it is the moment where something happens, right? Whether it is your trading approach, or you become kind of more disciplined, or your understanding of the market is getting better and better compared to where you started, right? For your experience, right? What was your turning point like?
I think there's quite a few turning points, actually. It's a really good question. I've got a big answer for you, so get ready. So in the 90s, when we were trading on the floor, there was no one really to teach us. Well, certainly in the 80s. I joined a market making company. So in 1987, when I joined, I was a broker. But after about 6 months, the stock market crash happened in 1987, and the volumes collapsed. So unfortunately, I lost my job as a broker in December of 1987. And I thought, oh my God, I'm 19 years old. That's my career over. I wanted to make all this money in the city, and I'm not going to do it. But I was really lucky because I got a job with the market maker. So that was a big change for me. And it was actually a massive opportunity, because instead of executing orders for clients, I'm now running my own book and trying to make money. But it must have been at least 2 or 3 years before I became profitable. And you've got to bear in mind, that was me right in the middle of financial markets in the city of London with very experienced people. I have my finger on the pulse. I couldn't be more immersed in financial markets, and still it took me 2 or 3 years. Now, there wasn't anyone to learn from, so it really was sink or swim. You're thrown in the pit, and you have to survive. So of course, 90% of people didn't survive. Nowadays, it's great because you've got YouTube, you've got books, there's just so much free information out there. But like you say, people don't take advantage of it, and it's crazy. They think they can just open an account, put some money in, and they're a day trader. It's like saying, I'm going to buy a racing car and put a helmet on and sit in the car, and now I'm a racing driver. Of course not. You're going to crash if you drive at high speed around a racetrack without having any experience and learned from someone. And of course, you're going to lose money if you put money in an account you don't know what you're doing. And in the 90s, even as I said earlier, we didn't think about mindset, we didn't think about discipline, we didn't think about risk management. It was you get in the pit and you trade, and we didn't have. We couldn't execute automatic stop loss orders because you're standing in a pit. We couldn't press a button. We had to do it ourselves. We didn't have all those tools. And you just got out of a trade when you felt too much pain, or you quit trading for the day when you're just like, I can't afford to lose any more money. So it wasn't until I went screen trading that I started to actually think about discipline. And we started to all talk about, we can set a stop loss now, and we can preset our target. And it wasn't even, I didn't even think about the discipline and then the psychology of trading. That was a totally new thing to me about probably 10 years ago, maybe even less. I'd already been trading for like 20, God, how long have I been trading? So I've probably been trading for 20 years or 15 years before I started to really get into the psychology of trading and realize what happens to your mind and what you have to do. So now, after nearly 40 years, I know that the process in order to become a successful trader is, well, number one, learn to identify low-risk trade opportunities. I use technical analysis to do that. Some people use fundamentals, but I have a technical analysis strategy that allows me to identify low-risk trade ideas. Then you have to understand risk management, account management, trade management. When you're in the trade, how do you manage that? How do you control your risk versus reward, and manage your account, so that you don't have big hits, not only on one trade, but on your account. You don't end up down 30% on your account, which, you're going to struggle to win that back. And even when you do that, you then have to completely understand trading psychology, because no matter how you can be the best technical analyst in the world, but if you don't understand how you can screw up your trading with your trading psychology, and I still do stupid things now, then, you can't be successful. So for me, that's the 3-step process. And each of those steps are huge. So I would say to your people watching, especially young people, you have to focus on this for 2 or 3 years. Don't think you're going to be a millionaire in 2 years' time, starting off with a $1,000 account. It's really tough.
Thank you. That is a reality of the market. Just don't believe what other influencers say, because you will experience it one way or the other. The market will teach you. And talking about the psychology, right? It is one of the most underrated. However, it is the most essential skill. And from my experience as well, I have seen and analyzed the market. But when I'm in the actual trade, right, and the trade does not go the way I wanted it to, and it is the psychology that kind of helps me whether I should get in, like stay in the trade, add some more, or get out of the trade, right? With your experience, right? You have experienced major market crashes from 9/11 to a couple of 2008 crashes, right? How have you developed and maintained the psychological resilience, right? You did say like you kind of developed that later on in your career. What techniques do you use right now to kind of stay composed during that extreme volatility market?
I think that sum it up in one sentence would be that you must plan your trade. I'm sure you've heard plan your trade, trade your plan. If you're not planning your trade and then working through the plan as the trade develops, then I think this is the key point. You don't have a trading strategy. If it's just like, you know what, I think gold's going up, it's in a bull trend, I've just woken up, I'm going to buy some gold. Okay, well, yeah, that's a good idea. But if you're in a bull trend, you're trend following, but you need a better strategy than that. You need a low risk entry point. You need to know, if I enter at this price, where do I think I'm wrong? Where am I going to exit the trade? And not only on the downside if you lose, but where am I going to take my profit? Don't just randomly jump in and think I'll just get out when I feel it's right, or I'm just going to watch the market and see what I feel. Because that's not a trading strategy. That's just having a bit of fun, having a gamble, and seeing how you get on. And the thing is, if you don't have that entry strategy, exit strategy, risk management strategy, account management strategy, then you can't build a data set to analyze. You know, you can do 20 trades and you could have 18 winners. But if I say to you, okay, brilliant, how did you make that money? What did you do? How did you decide to get in? How did you decide to get out? Because I want to replicate what you're doing. I want to be as successful as you. If you say, oh well, I could just kind of buy it if I think it's going up, or and I kind of wait and see. You can never improve on that. When you've done 50 trades that sticks rigidly to a strategy, you can say, okay, here's my entry strategy. I do A, B, C in order to get in, and then I choose my stop loss according to, I don't know, it might be moving averages or Fibonacci levels or trend lines or previous swing low or whatever. But you have to have a reason to get out, not just because, oh God, I've lost $200 on this trade, I better get out. And you have to have a reason why you're taking your profit. Well, I set my target, for whatever reason. Now you have a strategy. And then after 50 trades, you can say, okay, let's have a look at my data. Should I be widening my stop, giving myself a bit more room? Should I be giving myself, could I run these trades a little bit further for a greater profit? Or should I be taking my profit sooner and moving on to the next trade? You can actually analyze it, and you can try to optimize it. Oh, this strategy doesn't work so well when the markets are trending sideways, which is my case. I try to avoid markets that are trending sideways, but at least I know that. At least I know, okay, hang on, I think this is now forming a sideways pattern. I'm going to just back off. So unless you have that data, you're just random, spontaneous, and you can never improve. And the big problem is you can't say, okay, I'm pretty sure that I can consistently make X amount per week, per month, or whatever, because I trust my strategy. You can't. You don't know, because you've got nothing to base it on. You've got no history.
That is true, and that is one of the reasons. Like, you have to journal every trade you make, whether it is a wins or losses too. Talking about the analysis process, right? When you did mention about the strategy, you mentioned about the plan, and from my experience, when I talk to people, the moment I start talking about a strategy and plan, they kind of get blank and overwhelmed. Right? For you, what does a plan look like? First, and you explaining to someone who do not know, who have been trading, right? But they do not know what a plan consists of. Does it contain, the entry point, exit point, the reason why you're entering, the reasons why you're exiting at this point, the stop loss? What does your plan in general looks like?
Yeah, that's exactly right. That's exactly how you start with a trading plan. So, of course, initially, I guess initially it's like, how much money do I want to risk? How much can I afford to lose? So you start with that, because especially when you're starting out, you're probably going to lose, and you're probably going to blow your whole account. So when you're starting, I'm going to go in even before you execute a trade. When you're starting, it's not about making money. Okay, if you wake up and you decide, right, today I'm going to start day trading, I really want to day trade. It's not about, I think I can make, I'm going to put $100 in the account, and I think I can make $10 a day. Forget about what you can make. Forget about the profit. Think about, what will my process be? Okay, so then, yes, what will my entry strategy be? How am I going to look for low risk trade opportunities? Am I going to look at macroeconomics? Am I going to trade the news? Am I only going to focus on economic releases and trade around that? Or in my case, am I going to focus on technical analysis? So my strategy is pretty easy. I look at the 1 hour, the 4 hour, the daily, and the weekly chart. I use Fibonacci levels, trend lines, moving averages on all 4 time frames. I follow the slow stochastic. I'm a trend follower. I look at candle patterns and candle formations. That's pretty much it. It sounds like quite a lot. That helps me to identify my low risk trade opportunities. This is where I'm going to enter. I'm going to buy at a support level in the bull trend, for example. Okay, great. So gold's going up at the moment. If gold comes down today, I'm going to look for support levels where I'm going to buy, and I'm going to hope that the market turns around and reverses and resumes the bull trend. Dead simple. Where's my stop loss going to be? Okay, well, it might be, I can see the 100-hour moving average is trending up. It's quite close to, it's not far below my entry point. So maybe if it breaks below the 100-hour moving average, I'm going to get out, because I don't think that, I think that the chances of the market continuing higher at that stage have significantly reduced. Okay, so now I know what my exit strategy is. Where's my take profit? Well, it might be the previous swing high or whatever it is. How much am I going to risk? Well, I don't want to risk more than 1% of my account, because if I have 5 or 6 losing trades in a row, then I'm only going to be down 5 or 6%. It's not a problem. I can still sleep at night. I can still wake up in the morning and feel confident. If I lose 25%, I'm not going to sleep. I'm going to be thinking, how am I going to get that back? And that leads to revenge trading and all the negative things that we know that we have to deal with psychology. So this is how you build your strategy. And how many trades should you do a day? A lot of people come to me like, oh, I do really well in the morning. I do 5 or 6 trades in the morning and I'm up 3-4%. And then by the afternoon, I've blown it. I can't stop trading. So maybe you have to say to yourself, right, I'm only going to trade in the morning, or I'm only going to allow myself to do 5 trades a day, so that you really ensure that you cherry pick the best opportunities and you're not trying to trade everything. If you lose a certain amount on your account per day, you need to stop trading, obviously, because you don't want to get yourself in a big hole where the next morning you don't have the confidence to trade. There's so many moving parts to a strategy.
Wow, that is so much information packed in one. Yeah, say that is true. Oh, you did mention about the analysis of trend following, right? I'm curious. Do you follow market? Do you do market analysis, as in the stages, and the volume analysis as well?
I don't do volume analysis, and I recommend that you do. But for me personally, for the markets that I trade, I didn't find that it was something that was consistently reliable. And the key thing for me, I don't trade every day. In fact, I trade less and less, if I'm honest. I'm 56 years old. I'm lucky enough that I don't need more money. I actually need more time and less stress. So, but I have a service where I provide signals every day and full analysis. So I try to teach people why I've decided on this trade. I post charts and I give a breakdown, and I really enjoy that. And it keeps me involved in financial markets, and I really like helping people. I mean, last week we made over 2,000 pips. So sometimes it's very successful. My process has to be, I cover gold, silver, oil, forex markets, mostly dollar and yen pairs, and Dow Jones, Nasdaq, and S&P. So because I cover so many markets, it could be 30, 35 markets, I have to have a one size fits all technical analysis approach. And that's why I only use those tools that I just explained to you. They seem to work consistently day in, day out. I mean, not foolproof. I don't obviously, no, I do have losing trades. I do have losing days. But those tools that I mentioned tend to be the ones that I know I can rely on them, and they tend to be the most successful. But definitely volume, I can recommend to people to try monitoring it and see if it helps you with your strategies.
That is true. And like you mentioned, the gold, silver, oil, those are like a heavily traded assets as well. That is true. And now we're talking about the losses, right? You have had your long career, and with probably undoubtedly both wins and losses, right? Can you describe a significant loss that taught you an important lesson? And how did it influence your current strategy?
Okay, yeah, I've had loads of losses, and obviously early on in my career, I had a lot. Overconfidence usually leads to a big loss. So that's something I would warn people about. You start feeling too confident, stop, take a break, because the market will teach you very quickly that you have not beaten it. Big losses. So my big losses would have come from me. I had consistent big losses when I just wouldn't use a stop loss. I thought I was such a good technical analyst that I couldn't be that wrong. And so I would get in and I wouldn't, and especially if I'd been stopped out on a few trades, I was like, no, I'm not going to use a stop loss. I know I'll be right in the end. And sometimes you are, and sometimes you're not. And when you're not, you really take a beating. So I just realized, use a stop loss. You might get stopped out and the market might reverse. That does happen sometimes, but that's just the way trading works. It's better to just stop loss, move on to the next opportunity, not keep nursing that losing trade, hoping and praying, because it might come back or it might get worse. But while it's doing that, you might have missed 2 or 3 profitable opportunities. So and of course, the problem is your psychology, your confidence and the state of mind deteriorates when you're nursing a loss. It's much better to just bang out, start again, move on, and not suffer that crisis of confidence. So that was one thing, not using stop losses. cost me a lot of money. And trying to guess the market, like for some reason, I was always thinking the stock markets were about to drop. I was constantly selling them. And then I realized, what are you doing? Just follow the trend. Stop trying to guess where the market's going and let the market tell you where it's probably going. Don't make it hard for yourself. And so, yes, the trend following was another thing that helped me stop losing money, stop having expectations, and just start reading the market.
That is the difference, I think, that sets apart a beginner and someone who has an experience. Um, we in our community, we say stop loss is the worst thing that can happen to your portfolio. It is because that is the point. After that, it's just either you get out of the trade or it reverses back. And another thing is, like you said, not predicting but reacting to the market. It is super super important to kind of just indulge in the market and let the market lead you. And again, have a safety net where, if you are reading it wrong, then again there is someone that can hold it back, and that is what the stop loss is. Those two things are really crucial part, right? And that changed my understanding about the market as well. Is it is okay, you lose money, it is okay. Especially the problem I was having was when I used to see the red losses in my portfolio. It's going down, it's okay, it's down 1%, 2%, 3%, and then what comes out is a hope that it's going to reverse back.
Hope,
And
exactly. You're trading on hope.
hope is not a strategy. It is
Exactly.
it is not a strategy, and it has ruined a lot of my own personal account. And when I talk to people
Me
too,
too.
it's like what they usually do is, especially people with low, the trading balance account, probably like $5,000 to $25,000. They kind of approach it in a gambling sense. So they get in the market, and if the market proves them wrong, they stay in the market in a hope that it will go back, or either they make good money or they lose it all. And they're like, no, okay, I'm already losing $100, and yes, I can protect the other $4,500, but I already lost $100. Let's just wait. Either I'm gonna lose $4,500 or I'm gonna make some money out of it. And that is really important. Like, whoever stays in the market longest is going to make money. So find a way to stay as long as you can. That is real. I really love
Brilliant.
love the things that you're saying. That's true.
Yeah, I think it's. I don't know if it's Warren Buffett that says this. He says it's time in the market, not timing the market. Now that's slightly different because that applies to investing. It's like, buy stocks and just hold on to them. But you can apply it to what you've just said. It is time in the market. Make sure you can fight another day. Make sure you can turn up tomorrow and trade. Because if you blow your account, it doesn't matter how great a trader you are. You can't trade without money. So that's actually a good point. And if you don't mind me saying, I love your point about gambling, because people think trading is gambling. And if you're gambling, you're not trading. And don't fool yourself into thinking you're trading if you're so for example, if you go to the casino and you bet on the roll of a dice, the turn of a card, it's very structured. The game, when the game's starting, when the game is ending, and how much you can lose. Okay, I put $10 on red. The game, and then they say no more bets, please. So you have to sit and wait. They spin the wheel, and the ball falls. Oh, it's red. Brilliant. I've won $20. They give you the money back, and that's the end of the game. It's controlled. You can't lose more than $10. You know exactly what you're going to win. You know when it starts. You know when it ends. And when you run out of money, that's it. You're done. You're gone. But with trading, the markets trade from Sunday night to Friday night, depending on where you are in the world. Or if you trade crypto, they never close. So when the game starts is when you open the trade. Now, no one's going to tell you, when the game starts. So you have to do that. And no one's going to tell you when the game ends. The game ends either when you have taken the profit or the loss, or your broker says you've got no more money left. We're closing, we're closing the trade, and we're taking, you've got nothing left in your account. So you have to control the entry and the exit and you have to use a stop loss, and no one's going to, when you win, you get your $20 and it's handed to you. You have to decide when to take the profit. So this is why you have to pre-plan everything, because unless you do that, you're just random, and you are just gambling, and more than gambling in a casino, because it's completely uncontrolled. You can literally lose everything in your account on the first trade.
True. That is very true. Yeah. Um. Wow. We're half an hour already, and we're learning a lot. Thank you, Jason. Jason, you emphasize the importance of risk versus the reward in trading, right? How has your approach to risk management evolved through your career, and what do you consider the most crucial aspect of effective risk management?
So my risk management has developed through trial and error, because as I said earlier, when I started trading, there wasn't really anyone to teach me. There weren't that many books. There were some books, but unfortunately I learned the hard way through losing. I'm not a naturally gifted trader. There are some people who are just absolutely brilliant. They sit in front of a screen and they can just keep pulling money out of the market. I'm not that person. I had to create all sorts of processes to protect myself from myself, if I'm honest. So risk versus reward was your question.
Yeah.
So I'm going to say to you and your viewers, think about this, right? Nobody knows where the market's going to go. So you have to control the downside. And I've already given you loads of reasons why you have to do that. Now, if you could have a 55% win rate, that would be extremely good. That's, compared to most traders, a consistent 55% win rate is great. Now, if you're risking $1 to make $1.50, and most of your trades play out like that, you've got a tremendous strategy that will make you consistent money in the long run. That's all you need. It is just pure maths. And even if you've got a 50% win rate, as long as you're risking $1 to make $1.50, then obviously in the long run, you will make money. So just think about that. That's what you need to focus on. Now, if you can get your win rate up to 60% and you can risk $1 to make $2, well, you're going to make serious amounts of money. But you have to stick to that. And you can't allow yourself to then have a losing trade where you lose 3-4%, because then you're like, oh gosh, I've got to make the next trade win. And you're putting yourself under pressure, and you know what I mean? I mean, it is basic maths.
Yeah. Well, that is, and I think even I and probably I would start doing it too. Before trading, it's better to kind of visualize the amount of money you're risking. That's the first step you should take. It's like, okay, I have $100 or $1,000 in my bank account, in my balance. I'm going to lose $100. Now let me find a place where I can put in $100 and it has a potential to make $150 or $200. Right? If I lose $100, that's fine. I have 900 left. I can continue that for the 10 times, and out of 10 times, if you lose 10 times, then there's some serious problem in your strategy or the way you're, reading the market. But if everything is right, like you said, it's like you have to be correct certain percent of the time. And you don't have to be like, it's you have to be correct certain percent of the time. And I wanted to ask you this, like you have to let your winner run, right? So you are in a trade and you see market is going up and your portfolio is going up, right? And a lot of people kind of get in a fear mode and based on the experience they have had previously, and they cash out early, and you're leaving a lot of money on the table, like that was yours, right? What do you advise them, because it is essentially a money management, and you have to keep the emotion aside, whether you are losing money or whether you are making money, right? You have to keep that aside and just take it as a business or whatever
Yeah.
how do
Yeah.
you what do you tell them about letting their winner run?
Okay. This is a really big question as well. So I know traders that only have a 40% win rate. So let's say your strategy is to trade breakouts. I find breakouts quite difficult, and I find the success rate of breakouts quite low. But when you catch one, the money comes in thick and fast. Okay, so for example, last week I had my subscribers buying gold on a break above 25.33. It was an obvious trade. It was a break above the previous high. We'd been consolidating for such a long period of time. It was like the market was on a spring, it wound up. And as soon as we broke the all-time high, we were just going to go. And it turned out great because we hit my target of 25.86, actually hit the target on the nose, and that was the high for the week. So I was super happy with that trade. But you could breakout trades. I would say sometimes you have to try them 3 or 4 times before you get that money. So if you're a breakout trader, you might find that 60% of your trades lose, 65% of your trades lose. But as long as you understand that, and then you can run the winners, you can still make huge amounts of money. So your win rate, you have to take into account your strategy, and be prepared to run the winners. Now, your question was, how can I run the winners? Okay. So this is a psychology question. And of course, it all comes down to confidence. Stressful is trading when you're losing money. Yes, we know that. No one wants to lose money. But trading is stressful when you're winning, because, hey, I'm up 3% on this trade. I'm up $100. I can't. I have to. I don't want to lose that. I don't want to. We've all had trades where we're up $100 and bang, you're down to zero, and now you're down $50. You're like, I've done all this work on this trade. I got it right, and now I'm facing a loss, and I'm going near my stop loss. I mean, it's demoralizing. So, yeah, you start to suffer when you've hit an amount of money that you think is significant enough that you don't want to lose it again. So again, you have to plan the trade. Now, I recommend people when they start trading is that they trade a small amount of money, because if you're trading amount of money that creates these emotions in you, you're trying too hard. You shouldn't be feeling excitement and greed and unhappiness and pressure and stress. You should just be almost robotic. Yeah, okay, bang, I've done this trade. We're hitting my target, and I believe in partial profit as well. Because when you hit that $100 and you're like, and I want to take this money, but I know it's going to go further. Okay, take off 25, 30% of the position. You can breathe. Okay, I've got $30 in the bank and I feel good. If the market comes back, I might even buy that portion back and get back in. And if it keeps going, it doesn't matter, because I'm still going to make more profit. So it really, you have to find a strategy that allows you to manage your psychology, manage your confidence, and not get yourself into a panic where you're like, what am I going to do? I'm up money and I'm fearful now. I'm feeling fearful and greedy because I think the market's going to keep going, fearful because it might reverse. So have a strategy. Yeah. Partial profit maybe, or certainly trade us. If you're worried about your trade constantly, you're trading too big.
True. That is true. And I get this a lot. It's the beginner. You start with getting a thrill of a market, a thrill of emotion when you are in the market. And if you continue further down the year of experience in your in the market, right, trading becomes boring. And that is a good thing. Like you said, it is like you gotta be a robot, right? You have to keep your emotion aside. Okay, the trend is going this way, right? I'm putting this much money in. I'm risking this much, and it will start getting boring, is because there's no thrill anymore, because you're seeing it in a different perspective. And yeah, that is true. Awesome, Jason. Yeah, we're coming to a very very end of it. What key lessons from your journey would you give some aspiring traders right now?
Well, I think you've just said that in your last sentence. If you want to trade for entertainment, terrific, but recognize that you're doing it for fun, for the thrills of making money and throwing money around. There's nothing wrong with that, but don't fool yourself into believing that you're a good, consistent trader. If you want to be a consistent trader, then obviously you and I have both given the viewers some important tips there about how to manage your risk. And yeah, you're right. Aim for trading to be boring, because it should be just consistent. Okay, bang, robotic. I like that. It's absolutely true. That's the first thing. Yeah, trading strategy. Focus on the process, not on the money. These are things that mentors we all advise the same things these days. We've all come to the same conclusions.
True. True, that is true. Thank you. And for the final question, Jason, we asked this thing: what do you think it takes to be the
To be the ultimate trader.
ultimate
Wow,
bull, ultimate traders?
that's a yeah, that's a good question. Well, it's if I was to say it in one sentence, I'd say it's self-control. Know yourself, know your strengths, know your weaknesses, and be able to control yourself. Because until you can control yourself, you can't control your trading account.
Wow, that is a truth bomb right there. And you are your worst enemy. There's no one else.
Oh, and I have been. You know, people think, oh, wow, you must be such a great trader. I still do stupid things. I'm just human.
Yeah, yeah, exactly. That's part of being human. That is true, and we
Yeah,
have to accept it. And
I
and,
still
and
get greedy.
yeah,
Mm.
that's true. Awesome. Thank you so much for your time, effort, and again sharing your really inspiring journey. And I mean, I got hyped up when I heard about the good old days in a fit trading. It's really
It was fun.
fascinating.
Yeah, I wish I could have taken you on the floor. You would have loved the experience.
Thank you for watching this podcast till the end. I hope you got as much inspiration and motivation as I did today. The whole purpose of making this series of podcasts is to show that embracing the journey is as crucial as the final numbers. I believe you have already liked and subscribed to the channel. If not, please do so. Let's learn, grow, and lead this ultimate bull run. Until next time.